Okay, so today we're gonna go over the topic of let's go on a different chart. Um, okay, cool. Actually, no, we'll use something crypto related. We'll just stay on ETH for now. Okay, so today we're gonna go over internal range liquidity, and we're also gonna talk about external range liquidity. Now, I know that the names themselves, which honestly, a lot of the things in trading, what they're named or, you know, they're always crazy. They always sound way more intimidating than they actually are, right? Um, so, for short, we call this IRL. And if you're French, this I would probably stick to calling it the other things I'm going to show you right now because I know the French, they have like the I's and the E's are flipped. Um, so we have internal range as IRL and external range as ERL, right? So let's just, for a moment, we'll simplify a couple things, right? Internal range liquidity is a fair value gap, okay? External range liquidity are swing points. Is there anybody in here that needs me to go over what swing points or fair value gaps are? If you were not here last time, or if you care about being able to understand this lesson, which even if you don't know these, I think you'll see what I'm trying to show you and then you'll want to learn what they are. But if there's anybody that needs a refresher on what these two are, let me know because it's very important that you know. Okay, so cool. We'll get to that in a second. So internal range liquidity, let's just break down the word, right? Internal meaning inside of the range. Liquidity is another fancy word for saying money. So inside of the range money, which kind of sounds a little bit weird. Um, but we'll leave it like that for now, and we'll explain it more in a second. External range liquidity would be outside of the range money. We'll just put dollar signs because that's usually how people annotate liquidity. Um, So we're just breaking down the word. So if we were looking at this range, right, from here to here, if we're looking at this as our range, right, inside of fair value gaps, remember, like we talked about, there's unfilled orders in there, aka money, right? Fair value gaps are formed inside of ranges, not outside of them, right? Swing points are stop loss orders, right? They're not necessarily unfilled orders. Well, they are technically, but they're stop loss orders to get taken out below the lows or above the highs. So they take place outside of ranges, okay? So if everybody here knows what a fair value gap is, then we can do a quick swing point refresher. Um, so essentially, a swing point ERL, 3 letters, we're looking for 3 candles, right? Candle 1, candle 2, candle 3. The definition of which we operate on is that candle 2 is either the highest amongst the 3 or it's the lowest between the 3. If it is the highest between the 3 candles, then it is qualified as a swing high. So how can I double check myself to make sure that I have the right swing high annotated? I can look to the left at candle 1 and I can look at the right at candle 3. And if candle 1 and three's highs are lower than candle 2's, then this is by definition a swing high. And the opposing would be true. That if we look at the low and I look right and left, if candle 2 is lower than candle 1 and 3, then we have by definition a swing low. Okay? What's going on, Appy? Welcome in. What's up, merch? Um, so does that make sense, Chemo? So it's just literally we can map a couple, right? And we can check ourselves. Left, right, it's correct. Right, left, it's correct. So below these swing points, there is money. And just to kind of show you the significance of how important swing points are, I show this example quite frequently that every single major market local top or bottom is formed. It's usually formed first by an ERL or a swing point being taken out first, right? And it's been this way for a very long time across multiple asset classes, right? And again, if you go look at this on your chart, you'll see even all the way back here to the FTX crash, um, it holds true. Same with these tops a few years ago, right? So they're pretty important. So going back to this, right? We can remember that fair value gaps form inside of ranges, right? Fair value gaps form when price expands. And so they end up in somewhere inside of the range, and swing points get formed outside of the range, right? Um, when we say outside of the range money, we're mainly talking stop losses. When we're talking inside of the range money, we're mostly talking um, unfilled orders, people that didn't get counterpartied, so to speak. Okay, so now that we understand what ERL and IRL are and what they look like, we can start to get into why they're important. So the market moves from fair value to liquidity, to fair value, right? There is a constant cycle between ERL and IRL. And there are times where you will get an ERL to ERL move, but when you're in a trending environment, this is going to be true. That if we hit IRL, we're going to go to ERL. If we hit ERL, we're likely to go to IRL. Okay? This condition is true when we are in a trending market. So let's kind of take a look at what that looks like here in this specific leg, right? We have a fair value gap here. And again, if anybody needs a refresher on what a fair value gap is or any of the technical jargon that we're speaking, let me know. So what happens here? Price moves into an IRL, and then what does it target? ERL. Price takes out ERL, moves significantly lower, takes another ERL. Where should price go from here? It should go to IRL, right? And in a bearish trend, when we go to IRL, we expect that now we target ERL, right? So that's a very quick example of IRL, ERL in action, right? And to kind of show you that they have a relationship with each other, right? You can see it here too. You can see that we're in a bullish trend, right? Even though it doesn't last very long. We take out an ERL here, and then when we move back into IRL, what do we target? ERL, right? And then the reversal takes place, which reversals take place with ERL, ERL. But we're not going to get too much into that today. That's a little bit more advanced. But the main thing that I want you guys to think about is that inside a trending environment, we can reliably expect that price moves from ERL to IRL and IRL to ERL. Okay, and we're going to look at some really good examples of how this could have pretty much given you your bias for days and weeks on end. Okay, so Any questions so far? Any questions about what IRL or ERL is or anything like that? Because we're gonna keep going, okay? So let's take a look at this example on the weekly on Bitcoin. Now, for those of you guys that are familiar with me, you know that I've been posting about crypto for a very, very long time. And a, one of the biggest ways that I was able to get very good connections, um, get good opportunities, get invited to things, is by just sharing what I think online and just telling people, I think that price is going to go here over the next few days or weeks. And when you can do that on a consistent basis, I mean, there's a lot of people that do not have the skill to be able to do that reliably, and they're gonna want you to be in their group. They're gonna want you to join their giveaway, whatever. A lot of doors open up. So, and this is one of the main ways that I was using it. So, as we can see, right, no one needs to be a technical scientist here to be able to say this is clearly an uptrend, right? And so what happens, right? Let's follow price along. Price takes out an ERL with a reversal candle, right? We can start adding in some of the other things that we know to really start layering on the levels of clarity. We take out an ERL. Where should price go, guys? Based upon the rule that I told you. Exactly. Perfect. Back to IRL, right? Because here are the rules. From IRL to ERL to ERL to IRL. Right? So we move into IRL. If you wanted to know why it didn't, why it dipped all the way down here, um, probably because that's the discount part of the fair value gap. If we only mapped out the discounted part of the fair value gap, it gets pretty accurate, right? Um, so, and we filled that devil's mark, which I didn't go over too much, but I did tell you guys they have a very high probability of getting returned to. So we pull back into this fair value gap, aka IRL, and then where should price go after that? Back to ERL, whether it be this one that we're targeting or this one that we're targeting, right? And so let's keep going with it. Maybe we could do it on replay mode as well. It's a little bit more rewarding. So I know for the first few weeks this thing just skyrockets, right? And now I want you to imagine, right? Especially for those of you that are swing traders, imagine you got an entry here, like, and you're able to ride a move like that. It's gonna be wild, right? That's a very good question, John. Um, yeah, I do apply it to all time frames. You can use this as your framework. You can use it as your entry technique. You can use it for a lot of things. Uh, when it's most effective is when I can use my time frame alignments, right? Like we had learned about earlier in the week, and I pair them together. So on the weekly, I'm moving from IRL to ERL, right? And then let's say I go down to the 4 hour and I'm somewhere in here. I'm looking for the same thing on the 4 hour. I'm looking from IRL to ERL to get positioned, right? Because if we were to go on the 4 hour, we would see that this is just a market maker model, right? So I would be operating in a key time, right? I'm not just going to use any IRL. I want it to be during a key time for me to get on board. So you can see here, right? We have good opportunities here and here, right? And here. This one's a little bit trickier because we consolidate above it for a little while. But as you can see, right, for the most part, it becomes a lot easier to start to catch moves. Now, there's a way to avoid this kind of messiness here, and the answer to how to avoid this messiness, some of it, uh, is by paying attention to the candle closes because candle 3 is usually not going to be chaotic. It's going to be a little bit more uh, fruitful or directional, we'll say. So yes, it is applicable to all time frames. Time and price are fractal. So let's continue on. Right? So when I'm watching price on the higher time frame, I'm looking for two things. I'm looking for when swing points are made, like this, like how we talked about, where we close back inside candle one's range here, and then I anticipate that third candle, especially when we get a reversal candle and it's candle two, I'm expecting candle three to be continuation, if not candle four, and on a rare occasion, candle five, right? So I'm looking for that, and I'm looking for the formation of IRL, aka fair value gaps, right? So look, we can see a couple here, right? There's a fair value gap here. Let's see if we can wait for another one. Now again, just uh, and I understand it's like taking the best case scenario, I suppose. Uh, but just imagine you kept all your spot bags and you added to them down here, and then you get to enjoy a move like this by using such a simple framework. How many lines do I have on my chart? How overwhelming is this chart? Not very overwhelming, right? It's very calm, very simple, it's easy to understand. And that's what we should be aiming for. At the end of the stream, I'll show you guys an indicator that I created that makes it look like I work for fucking Wall Street. But at the end of the day, even though that indicator did help a lot to make me some money, you just can't beat something like this, where it's simple, easy, and effective, right? I think that those are things that everybody can appreciate, especially in the world of trading where everything is already very complicated. Okay, so we can see that we formed these IRLs. For those of you guys that wonder why like I cut out, I don't know. My mic just it doesn't like the fucking PC or something. Or Discord, I don't know. But yeah, so we have these IRLs that get formed, right? So my eye is on them. I'm not chasing price here. Now, there are ways to get on board. Specifically, if I see last week's candle get closed above like this, then I expect that we're going to go higher in most cases. But we're not really going to get into that. So for the most part, if you're using this framework, you're just waiting here. You're being patient. You're waiting till price comes to you, right? And it may not come to you. Maybe you may have to wait, right? So you can see we create an order block here. We'll talk more about that in a different session. Okay, so now we formed ERL. We took it out. I'm anticipating that price comes back into IRL. And then what, guys? Where does price go after this? And I know the questions feel simple, but the repetition and asking you these questions and making you think about it for a moment is going to do a lot for your retention and your ability to apply it to yourself on your own charts. Yeah, I'll take swing top. I mean, I call it swing high or ERL, but we'll take swing top. We'll take that. So we'll call that correct for sure. Um, so think about this now. This is our framework. What's the purpose of our framework again? Our purpose is to I don't want to have to fucking focus on a ginormous segment of price. I don't want to have to focus all the way back from 2017 all the way to 2021, right? It's so much information for me to be looking at. I want to condense it down into a small, look at the framework of just like the screen, right? And look at how much data gets removed when we do it this way, right? There's significantly less for us to pay attention to, right? And so what can we see here is that we have a high time frame IRL tagged, right? So we tapped it here, and we have a high time frame ERL. So when I annotate, I like to annotate like this so that I remember my bias. So let me ask you guys something. At this point in the chart, are you guys bullish or are you bearish? You guys don't even have to type it. You could literally just think to yourself. Okay, bearish. All right, well, kudos to you for being one of the only ones to give your answer. Takes courage. So that's a good question, John. We'll touch on that right now. But the correct answer, okay, let's see, bullish, but at some point waiting for pullback. I'd be bullish. Okay, nice. Anybody else? John, what do you think? Bullish. Okay. So the reason that it would not be bearish, you may see the bearish candle and think, this price is moving down. But that's precisely when you want to be thinking about buying. And I'm not saying that as like a blanket statement where, oh, price is moving down, get ready to buy. Not like that. We have a very specific point in which we are looking price to move down to, right? Now, at this point, we're not anything. We're neutral, right? Um, Nothing here has happened that's actionable for us yet. We're waiting. And what are we waiting for? We're waiting for price to move into a key level, right? Once again, if I zoom out, it doesn't take any sort of technical genius to be able to understand we're in an uptrend. And what's the rule? If we're in an uptrend, then these rules are to be respected. What got hit last? ERL. ERL, so then therefore we should go to IRL. So in this case, you could start to maybe vaguely be bearish that at some point we're going to revisit this IRL, but we also have to understand that that's not an absolute given. Now, if we made a high here and then we swept it and put in a huge reversal candle, then it would make sense to be like, okay, we're definitely moving down to that IRL, and we're going to look at an example exactly like that. Yeah, you can absolutely trade the pullback, but if we're in a bullish market, the pullback is manipulation. So some of you guys here, your personality might be you like trading that move into the key level, whether it be an IRL or ERL, right? And then you're gonna have people like me where my personality is I much rather trade the expansion going back up and potentially hold up some runners past this point. Don't worry about it, G. You can you can watch the streams if you're interested enough. Well, if you like trading the distribution of power of 3, right? Then absolutely, right? You would think of it like we expanded, we pause, accumulate, we manipulate, just like we talked about. What's the purpose of manipulation? To get us into a key level. We manipulate into the key level, then we distribute out of it. Because this here is also power of 3, right? We get, sometimes it's not inside of a power of 3. Sometimes we don't need a manipulation if we're trending, right? We could consolidate, move up, um, well, I guess yeah, it could just like keep moving up with very shallow pullbacks, but most of the time, right, we're gonna get decent retracements. And when you see price like this, for you to start to be bullish will only have to come from, hey, we just hit a key level. So that's something that we could start to formulate a bullish thesis. And then we get a reversal candle. And then in candle three, we get an inversion. And then we have equal highs. And then it's IRL to ERL, you know, and we form our thesis like that. Um, yeah, so what we're waiting for here is we're waiting for IRL to get hit so then we can trade it back to ERL, just like this, right? So we're waiting, right? We tap into it. And at this point, I'm interested. When I see this happen on Bitcoin, I'm rubbing my hands together like a fucking fly, bro. Like I'm getting ready to land on that shit. Like I'm getting ready to hold some runners because the moves that come off of the weekly, if you can align yourself with it, it's sweet sweet money. Like you get paid, you know, and there's so much less stress involved because every single day is just like moving like this, and then the pullbacks are like into another fair value gap or an order block or something. Yeah, literally, I'm getting ready to snipe that shit. And that's actually the name of the concept of where you try to capture a large portion of the weekly range, meaning that each one of these is 1 week worth of time. Trying to capture the majority of this with one trade, we call it one shot, one kill, right? We don't play the machine gun game here. If you're playing the machine gun game, it's very, very easy to hurt yourself. You know, if you spray and pray, well, then you better hope that somebody answers your prayers because the market doesn't take prayers. Unfortunately, I had to learn the hard way. No matter how hard I prayed, it doesn't give a fuck. I prayed to God for strength, and he gave me a liquidation notice. Okay, so again, how would we use this as actionable, right? We can do two things here. We can wait till we close back above candle one. We can go on the 4 hour and look for an inversion, right? These are all things that we can either use independently or combine for a greater chance of probability, right? So let's take a look at the 4 hour, right? And then we can put a, we'll put some weekly candles here. Okay, so what this indicator is doing right here is it's showing me the high time frame even though I'm on the low time frame, right? And this can be particularly helpful. It's ICT. I just type in ICT fatty and high time frame candles comes out. I don't think the settings are too difficult. They're pretty intuitive. But so it's showing us what the weekly candle looks like here. So once again, let's start combining a lot of the things that we've been working on together because I really want you guys to feel rewarded not only for showing up but for those of you that are participating and answering the questions, uh, for those who you know are just showing up consistently, they're catching up by watching the live stream archive. I want it to be worth it for you. um I had a question. Whenever you get the time, Grim, you said you pair weekly with 4 hour. Yeah, so just very quickly, you can go monthly to daily. And once again, you can use 3 time frames or you can use two. Um, the more, well, I won't say the more time frames, the better, but if all three of them are aligned, it's a lot stronger than just two. But two is simpler. It might have a slightly lower win rate, but you'll have less information that you have to use, which is always a plus. So monthly, daily, 1 hour, weekly, 4 hour, and then the 15 or 5 minute, but it's usually the 15 minute, and then daily, 1 hour, and the M5 or 1. right? Which if you're gonna be trading on the 1 minute, better make sure you know what you're doing because the 1 minute is difficult to trade. Now, and again, it keeps going, right? I can do 1 hour, 15 minute, and 1 minute slash 30 seconds, or 15 seconds even. And yes, you can trade on a seconds chart, and you can do it consistently and consecutively. But yeah, those are the time frames we're working on. So once again, we're going to use what we learned last time, right? I'm trying to look for the market maker model, right? We got our intra-week highs here. We get this first move down, right? Right here. And then we get a move into our key level. Maybe something like that's a little bit better. Yeah. So where does the low of the week form usually? In higher time frame key levels. What's the easiest way to find a high time frame key level? IRL and ERL, right? And so we have our market maker model visualized here. We have our key level, right? Now we need confirmation. So either this weekly candle closes above this one, or we wait for an inversion, right? Which when I'm looking for inversions, I wait till the key level is hit, and once the key level is hit, I start going back in price. And I'm looking for the first fair value gap, which is here. If we can flip this, that will be my trigger to go long. Now you can also use order blocks, you can use breakers, there's a vast myriad of entry techniques that you could use. But for now, we're just gonna work with that. Okay? So I'm waiting for price to do its thing, right? That's not really a convincing close above for me. So I would wait. Here's a fair value gap. Here's an order block that we could potentially use, right? Could enter off of IRL, ERL, right? Someone was asking earlier, can I use it on different time frames? Yeah, we could enter right here. Right, we could use this fair value gap, and my long position could look like this. I'll put my stop at the low, and I TP up here, or I just aim for 2R, right? That's a potential entry, right? And another thing, even if you guys start using this model and you lose the first trade, if you guys go and backtest, you'll see that losing X amount of trades in a row is very rare. I won't tell you the number, but it's usually worth taking another stab at it. So we can see that price gets a nice reaction, right, off of that fair value gap. We're still just going to wait for the inversion because that's what we said we're going to do. Get a nice, another little reversal candle. Okay, let's see, maybe it gets stopped out the first time. Okay, so if you took the fair value gap, then you got stopped out. If you waited for the inversion, you didn't, which I'm not going to say one is higher probability than the other, but me personally, I like to use the inversion a lot more. So we come back into that key level and we're still waiting. So now we're not going to use this inversion anymore because price went back down, right? So we're going to use the next one, the next most recent one, which is right there. Okay, so we're waiting. Still nothing, right? No new fair value gaps being made. So we're still going to wait patiently. Okay, here we go. Let's see if we can get it here. Boom. So at this point, now I would go ahead and enter, which let's see if it lets me. Okay, cool. We're going to put our stop loss at the low. We're going to put our TP at the high. Okay, and I don't know what this trade's going to do. I didn't cherry pick. I just literally chose something from a piece of price that I didn't know what was happening. Okay, so now we start to get a movement up. Even if we close back below just a little bit, that's okay with me. The inversion, when it happens, it's a advanced market structure shift. So it's pretty much telling me that this move lower, the sell side of the curve, like we talked about last time, is pretty much done. It's a pretty reliable indicator for that, right? So we can let price continue to play out. And what do I expect, right? Either we respect fair value gaps or we sweep lows and reject and go higher, right? Which once again, I don't know, right? Remember also this is going to be slightly lower probability because we did not close back inside candle one's range. But nevertheless, we're going to keep going with it, right? So we sweep the low, we get a turtle soup and we start rejecting, right? And then price continues to expand, right? We respected this small fair value gap right here, IRL to ERL. So even from here to here, you could have taken a trade and made good money. You know, it depends on what leverage you're using, but uh, the moves you can catch will make you money, right? IRL to ERL. And maybe you just use it to get on board to get all the way up here. You know, you don't necessarily have to go for the lowest ERL that you see, although that is the highest probability, looking for low-hanging fruit. And there we go. There's one trade example of how we could use IRL and ERL. And if we go back to the weekly and we look at this, right, we can see that we were trading amidst a IRL to ERL move. And look for how many days we were going up. So for 12 days, we were on the buy side of the curve. Those 12 days, if you can only take longs and you're only looking for long setups, your life becomes significantly easier. Okay, let's keep going with it. Okay, once again, we have an ERL. Past ERL got taken out, therefore price should go to IRL. Right? So again, we're going to go on the 4-hour and we're going to wait. Either we close inside candle 1 or we get an inversion, right? Okay, all right, there it is. So once again, once price is being hit, I'm using the last created IRL, which would have been this one, but then we created this small one right here, right? And this is why it's important to practice uh, going and looking for IRL and ERL because you get very, very sneaky ones like this where this one's very small, but that's our entry trigger. So we're going to enter right off of the close of that candle. Okay, we're going to put our stop loss. We can either put it here at this low or we can put it at this one. We'll go ahead and put it at this one and then we'll put our take profit at these relative equal highs. Okay, so once again, key level hit, confirmation, right? Is it super high probability? Nope, not yet because we have not closed back inside candle 1, but it does look promising, right? So we're taking a little bit of a risky trade here, but that's okay, right? And then we get stopped out. That's fine. And this is part of the reason why I told you guys don't be afraid if you lose the first trade to go in again, right? We're going to see why. So we're going to wait for the same thing, right? Except we're going to use the last one now, which is going to be this one. Okay, and we can even start visualizing our power of 3 here, right? Could look at these candles, right? Consolidation candles are accumulation, get a manipulation, and now a distribution. Okay, so we're gonna wait for price to close above that. There we go. Let's go ahead and hop in again. Hmm, why is it only letting me buy a stop loss? It's weird. Alright, there you go. We'll put our stop loss at the low again, and we'll put our stop loss at the high. Okay, and we'll let it play out. And again, I don't know if it's going to stop me out or not, but there we go. We're up at least 1-to-1 right now, so could even take it off there, and that's fine. We can see IRL, ERL being respected beautifully on this way up. Right there, and right here. Here as well. Right, and so on. And this is why I like trading the most. Right, we can see that we sweep that low. Right, we get that turtle soup. We reject off of it. We keep moving up. Okay, and maybe that would have been a good time to start taking some P, but we're just gonna leave it on there just cause. We'll just let it all play out. And there we go. Right? First one lost. That's okay. We'll go on in on a second one. Now there's ways to have avoided the first loss, but we're not getting that technical yet. Okay. So there's some examples of how one could trade using IRL ERL, one of the simplest frameworks that there is. Right? And as you can see on the weekly, we were a part of some of the biggest moves on the chart, right? So we'll go ahead, we'll end that, right? Get a nice little report. Okay, so any questions before we move on to these last 10 minutes? You guys know we're just gonna go over what we had called out. Let's see if it worked. Let's see if it didn't. Maybe I made a mistake. Um, and yeah, any requests from you guys as well, let me know. First one we're gonna look at is gold, right? So remember what I told you guys here. Let me remove some of this junk out of the way. I told you guys that we had a 4-hour, let me remove these real quick, that we had a 4-hour fair value gap. We had a 4-hour swing low being formed, and we closed back inside candle 1. Candle 3 didn't expand higher, so candle 4 should, right? This is what we talked about. And so how could we have gotten on board? I pretty much told you guys that you could enter off of this inversion, right? We came back and we retested it, right? So you could have literally taken the entry that I called out yesterday. You could have entered inside the inversion, and you would put your TP here, and you would have put your risk to reward down here, right? If you took it on the retest, I mean, you got some pretty nice risk to reward. Well, I mean, 1.7 is not bad, but 2 is ideal. So I guess it's not the greatest, but um, W call out on that. And yeah, we came out of a 4-hour that we're using the same topic, same ideas. We just used it on the 15-minute, right? We got that accumulation, manipulation, and look at this distribution. I had some notes on silver, but they were gone when I came back to it. But I was pretty much saying the same thing about silver, which was right here, right? Is that get ready because we're moving into this fair value gap here, and we're putting in the low, right? We're closing back inside candle 1, reversal candle, bang. IRL respected, bang. Right? Sol, I mean, we pretty much just said Sol was going to go down, and it's just keeps going down. We were looking at this, right, on the weekly, but on the 4-hour, haven't, I mean, I guess there was a there was this inversion here. So you could technically be in a position here. The problem is for me with this trade, the reason that I necessarily probably wouldn't be participating is because of how far candle 2 is from closing back inside candle 1. I usually don't like taking trades like that. I like it when they're a lot closer and we can get that closure back inside. But if you wanted to take it without that probability, um, you could have gotten in on this inversion, and right now your setup, you would be a little bit underwater right now. It would look like this. I would probably lower it to 2 risk to reward personally, but yeah. But yeah, so we're just seeing what happens in that key level because we're obviously moving off of this IRL and ERL at the same time. Yeah, same thing with Bitcoin. Really just waiting, honestly. What else did we look at? I know we looked at, was it Sui? Let's check up on Sui. Yeah, I mean, like, same. It's going to be pretty much the same thing on most of these alts that we're in here. We said that we would wait for some confirmation, that we were mainly looking for that candle closure, or at least at the bare minimum a reversal candle, which we have not gotten yet. Um, let's see, we looked at Fartcoin. Same thing, ugly close though. It looked better yesterday when we were looking at it. It looked like potentially it could be a reversal candle. Right now, it's not looking too hot. We still have 3 days, but mm, not encouraging. This is why I like to wait for the next week as opposed to trying to catch the knife. Looking at Zcash, Zcash still looks decent. Um, Still looks like a decent chance that in the next 3 days it could close above here and maybe even candle 1. Um, but yeah, definitely have to wait because that's ugly. Um, we're looking at Dash. We're finally in premium. I mean in discount. Personally, I'd be waiting for at least that for us to come all the way back down here. Or maybe off of this order block too, actually. But I would need like a decent curl up, at least like above this high, to really think that we're gonna go back up there. We're looking at pump. We're looking for this daily IRL to potentially be flipped, and then that would be our trigger. But as you can see, we're respecting it by going lower, right? So got a 1 hour inversion here after hitting the key level, so probably coming for these lows. We're respecting bearish IRL right now as well. And then we looked at World Liberty Fi. Was I on a different chart? This one. There you go. Nice. So I think we did it from weekly. Yeah. So weekly IRL to weekly ERL, and then I believe we went to the 4 hour. There was your inversion. Uh, if you were being, what do you call it? If you were being too tight on your stop loss and you put it like here, because I know I had mentioned that you can either go like this or you can go like this. If you took this one, well, then you're out. But if you took the safer one, you're still in and you were able to take some, what's it called? Take some profit at that first target, right? What did I tell you guys? You look at those equal highs, almost always my my eyes just snap to it. Yeah, this is World Liberty 5 that we're looking at right here. Um, so yeah, it does look like that inversion worked out well. And now we're probably in that buy side of the curve. We hit the minimum target, you know, not 100% sure if it will keep going, but uh It's about to hit this order block. That looks good. So I guess we'll just have to see. But it's nice to see that our first target got hit. BTC. BTC, I'm really looking for. I would like this low to get hit. Oops. I want that low to get hit because we have that IRL to ERL right there. Yeah, 84. Potentially even all the way to 80, but we could definitely just sweep this and then take off. But yeah, the short trigger on here, you would have taken this inversion. So right when we closed below here, you would have went short. You could have targeted these relative equal lows or 2R. So yeah, still bearish for me on Bitcoin and Sol as well. We called out in the stream this bearish IRL. We've been sending lower ever since, probably into here. And this is the market maker sell model, if you guys remember. I think I even showed this one as an example yesterday. See, maybe I could pull it up. Yeah, look, check it out. See, so it's not exact, but close enough to be able to make us some money. Yeah. All right, fellas. Any other requests, questions? Last call. So I don't remember looking at any other coins than that, unless you guys want to look at something new. Yeah, I do. 86. Yeah, we could definitely. I mean, price could take that out. You're looking at these lows. I'm imagining. Uh, like for example, which we're not gonna go into this today, obviously, because hour's already up. But um, it Bitcoin could technically take this out, and then on Ethereum, this level would get taken out, and then Bitcoin wouldn't need to take out this level. We call that SMT. Uh, that's possible. Or we could even just take it and then bounce into this bearish order block. It's not a bearish order block yet, but it's probably highly likely to become one. And then send back lower. But yeah, for me, I'm waiting for next week to trade. If I'm not already in shorts, which I already, I mean, I took profit on my shorts. I didn't want to hold the whole move. I'm not really a swing trader. Yeah, so if there's no more questions or anything like that, then I'm gonna catch you guys later. Remember, you guys can always send me DMs or just like Sneak did earlier today. He pinged me and he showed some good work. Yeah, yeah, exactly. And we're gonna talk about that in one of the sessions too. We're gonna talk about the economic calendar as well. And yeah, man, if you rewatch the streams, like I mean, you will just get better. That's all. The only thing I can guarantee is that you will get better at this. All right, fellas. Well, once again, really appreciate you guys turning out. Appreciate your consistency. I'll meet you right there if you meet me there. Um, and yeah, let's keep let's keep building our knowledge and working together and stuff. Yeah, you guys have a good night. See ya, fellas.